Now, what are your experiences as a business with your debtors or your creditors due to past events? It is possible that due to the behavioral pattern of the way debtors pay and how a business pays its creditors, there could be some effects on the economic benefits that will be derived. Now, in order to cushion the effect of this on the business activities, we will normally make provisions. This will take us to adjusting for provisions in final accounts. Provisions are additions or subtractions from accounting items, revenue, cost, asset, liabilities, recognized in an accounting period to cushion the effect of these items on the activities of the business due to past events or business experience. What am I saying? Due to the fact that you've been in business for some time, it doesn't have to be too long, but because of the experience you have, you are expected to take some steps, to accommodate for these experiences as it affects your cash flow. So your debtors and your creditors, you understand, in terms of receiving due cash from invoices sent to debtors and paying your creditors, you see, we make provisions, This is usually based on past behavior. Now, for instance, if your debtors are known not to settle 100% of their debt, but because you have a relationship with them and you have to keep them in business, you see, you can decide to make provision for certain part of the debt. You understand? To accommodate for the possible loss of fund to these debtors. Your debtors owing you say 1 million. It's possible they will not pay everything due to past experience. You can accommodate for that shortfall, so that you manage or mitigate the effect on the business. So one of those steps is making provisions. Now, for this study, I want us to quickly look at reserve versus provisions. We have explained provisions, as taking part of accounting items to cushion effect on the business activities. Now, part of your profit can also be reserved or set aside for various purposes: business expansion, operational backup, distribution to owners, and whatever reserve name you want to call it, based on what you want to use it for. So when you take part of your profit and keep it somewhere, for future use, which can be for reasons as decided by top management or by the business, you are making a reserve. So from time to time, businesses make reserves. It could be revenue reserves, it could be capital reserve, it could be valuation reserve, and these are usually done based on certain standards and principles. So basically, we should understand that provision are part of items set aside to cushion their effect on the business activities, but reserves is the part of profit set aside for future use. So pending when we decide or conclude plans on taking classes on reporting standards, I would advise you to pick up IAS 37. That's provisions, contingent liabilities, and contingent assets. You can read a bit on that. Bad debts and discount allowed. Now, when someone is owing you and for some reason you could not get that money back, we call that bad debt. So it means that you have allowed the person the money without permission. That is, you didn't permit it, but for some reasons you could not get that money back. So that's bad debt that cannot be recovered. Now, discount allowed is a willing allowance. You allow the debtor a part of the amount is owing you. You understand? Willingly. So that is discount what's allowed. So if someone is owing you 100,000, okay, don't worry, pay me 90, keep 10. That's discount allowed. But someone is owing you 90, someone is owing you 100, pays you 80 or pays you 90, and you say, where's the remaining 10? Giving you stories here and there. For some reason, you couldn't get it back. So unwillingly, okay, fine. It becomes bad debt. So that's a brief, simple explanation between bad debt and discount allowed. Now, provision for bad debts or discount allowed. Now, we can set aside or we can take part of the debt owed, recognize them so that we can cushion any possible loss of funds to debtors. What I'm saying is, taking parts of the debts, recognizing them in the books or in the accounts so as to cushion the effect on possible loss of funds to debtors is what we call provision for what? For bad debt. So basically we make provisions to mitigate against the effect of loss of cash to debtors or to those owing the business. Now, making provision and accounting for them is a function of increase or decrease. And for you to get to know whether it is increasing or decreasing, you compare provisions made at the end of the reporting year against the provision made at the beginning of the reporting year. I already explained that the end of a previous year is the same as the beginning of the current year. So now, increase in provision for bad debt or discount allowed. Now, this is the excess of provision as at the current year end of reporting over provision as at the previous year end or beginning of the current year. What am I saying? At the beginning of the year or the end of previous year, you made a provision, say 10,000. At the end of the reporting year, you made a provision, say 15,000. You can see that there's an increase from what? From 10,000 to what? 15,000. That 5,000, okay, is the increased what? Element. So the difference is treated as an expense in the profit and loss account, while the provision at the end of the period, okay, reduces the debtors balance in the balance sheet. Look at this. Illustration. They said the debtors value as at 31st December 2018 is 500,000. A provision for the bad debt made as at 31st December 2017 is 40,000. Assuming that the provision as at the end of 2018 is 10% of debtors, show the necessary accounts to recognize the provision. We have established that the debtor value is 500,000. And as at the end of 2017, which is the beginning of 2018, there's already a provision of 40,000. Now, by the end of 2018, they are making provision of 10% of debtors. So 10% of 500,000 is 50,000. So you can see that there's an increase from 40,000 to what? 50,000, which is what? 10,000 naira difference. So let's go. We have provision for bad debt. You can see opening provision here or balance brought forward, 40,000. Profit and loss difference here, 10,000. Closing provision, 50,000. The difference is 50,000 minus 40,000. What you have here is 10,000. On how to know if the opening provision is credited or why it is that, I already taught you trial balance. You should know your trial balance by totals. Okay, assets are debited, liabilities are credited, expenses debited, incomes credited, provision for expense item credited, provision for income items debited. Go back to trial balance class and get to understand that aspect of double entry and trial balance. So now we have that done. So we have profit and loss account here, provision for bad debt 10,000. That's what you have here. And then we have the balance sheet, assets, debtors. So it will reduce from 500,000 to what? 450,000, which is 500,000 minus 50,000. That's 450,000. I already explained that decrease or increase is a function of what? The opening and the closing. So if the what? Opening provision is higher than the closing provision, then there is a decrease. The difference is treated as an income in the profit and loss account, while the provision at the end of the period reduces the debtors balance in the balance sheet. So here we have illustration. The debtors value as at 31st December is what? 300,000. Provision for discount allowed made as at 31st December 2017 is 45,000. Assuming that the provision as at the end of 2018 is 10% of debtors, show the necessary account to recognize what? Provision. Now listen. We are aware that the opening provision is 45,000. Now, the debtor value is 300,000. They say closing provision is 10% of 300,000, which is 30,000. So you can see that it has reduced from 45,000 to what? 30,000. That would mean by decrease in provision for bad debt or discount allowed. So here we have provision or discount allowed, opening provision 45,000. We have closing provision 30,000. The difference is what? 15,000. That's what you have here as an income. Provision for discount allowed, 15,000. Then in the balance sheet, current assets will reduce 200,000 minus 30,000. That's 270,000. Now, discount received is a reduction in the debt owed by the business to suppliers with the consent of the supplier. So, if the supplier you're owing your supplier, say 1 million, and the supplier says, okay, pay me now around 50,000. He has reduced that from 1 million to 950. That means there's a discount received of what? 50,000. Now, because or based on past events or past experiences, we also make provisions for items like this to cushion their effect on the what? On the business. So discount received is a revenue item, and it affects our creditors. So when you make provisions, okay, to cushion the effect on the revenue activities of the business as it affects what? Creditors and discount received, you are making provision for what? Discount what? Received. In the same vein, provision for discount received can also increase or decrease. We have already established that the issue of increase or decrease is a function of what? Opening provision and closing provision. So where there is an excess of what? The provision at the end of the current year over the provision at the previous year ending or beginning of the current year, there's an increase in provision. Now, increase in provision or discount received, the difference is treated as an income in the profit and loss account, while the provision, as at the end of the reporting period, reduces the creditor's balance in the balance sheet. Now, here's a question. The creditor's value as at 31st December 2018 is what? 400,000. A provision for discount received made as at 31st December 2017 is 35,000. Assuming that provision as at the end of 2018 is 10% of creditors, show the necessary accounts to recognize the provisions made. Okay, so we have established the opening provision to be 35,000. Closing provision is 10% off of the creditor's value, which is 400, that's 40,000. So there's an increase from 35,000 to what? 40,000. Now what you have here? Opening provision 35,000. Closing provision 40,000. What's the difference? 5,000. That goes to what? Profit and loss as an income. Okay. Then in the balance sheet, current liabilities, creditors value will reduce by 40,000. That's 360,000. Now, decrease in provision for discount received is when there's excess. That is, the provision made at the beginning of the year or the end of the previous year. Okay, so this excess of what? Provision as at the beginning of the current year or end of the previous year over the provision as at the end of the current year. Okay, so what I'm saying is that this current year, there is a beginning, which is same as the end of the previous year. Where the value at the beginning is higher than the value at the end, that is what? A decrease in the word provision. So the difference is treated as an expense in the profit and loss account, while the provision as at the end of the reporting period reduces the creditor's balance in the balance sheet. Here's a question. The creditor's value as at 31st December 2018 is 380,000. A provision for discount received made as at 31st December 2017 is what? 65,000. Assuming that a provision as at the end of 2018 is 10% of creditors, show the necessary account to recognize the word provision. We have established that creditor's value is 380. Beginning provision is 65,000. At the end, there's 10% of creditor, which is what? 38,000. So there's a decrease from 65,000 to 38,000. So look at it, we have provision for discount received. Opening balance is 65,000. Closing balance is what? 38,000. The difference is 65 minus 8, which is 27,000. So you can see here, profit and loss, we have provision for discount received, 27,000. Then in the balance sheet, current liabilities, we have 380,000 minus 38,000, which is what? 342,000. Now, it is possible to have written off a debt and then recover it later. Say someone was owing you an amount of money and then you forgot about it, you wrote it off as bad debt. Now, after some time, the person paid you. That is bad debt recovered. You had written off the book, but now you are bringing it back to book. Okay, that's what we call bad debt recovered. Now, the amount recovered increases the other income of the business and cash at hand or bank of the business. What I'm saying is the person pays you in cash or transfers to your bank. So it means that you've made other what? Income. Okay, and then your bank balance or the cash balance has also increased by that what? Value. Now look at this question. The debtor's value as at 31st December 2018 is 200,000. A provision for discount allowed made at 31st December 2017 is 15,000. Assuming that provision as at the end of 2018 is 10% of debtors and a bad debt of 30,000 written off years ago was recovered in 2018. Show the necessary account to recognize the word provision and what? The recovery. Okay, we already know how to treat provisions for discount allowed. But now they are saying that in the year that we're treating the provision of discount allowed, they also recovered what? A debt. So we have provision of bad debt. You already know what to do. Opening provision is 15,000. There in the question. Closing provision is, they say 10% of what? Debtor value, which is 10% of 200,000, which is 20,000 here. The difference is what? 5,000. Is an increase. So that is what? Profit and loss difference here. Here to be what? 5,000 in the profit and loss extract. Okay. Now remember, in the balance sheet, the provision made at the end of the year will affect the debtor's value. So we have current assets 200,000 minus 20,000, which is 180,000. That is it for provision for discount what allowed, or provision for what? Bad debt. Okay. Now you must understand. So that's it. So here is provision for discount allowed. Okay, not provision for bad debt. But the question said discount allowed. Although discount allowed and bad debt technically have the same treatment, just that the name, okay, and the meaning, they mean two different things, but they have the same treatment. So we have provision of discount allowed here, already explained. So we have profit and loss account extra. Provision of discount allowed here, 5,000 from here, and then it will affect your debtors, which is 200,000 minus 20,000, 180,000. But they said that they recovered 30,000 from a debt long ago. So they had already written it off. Now they are recovering it in cash. So your cash will increase by 30,000, but it's going to be an income, okay? Because you already reported as a loss in the previous year. Now you're recovering it, so it will help cushion your what? Your revenue. So we have bad debt recovered here in the P&L extra, 30,000. Okay. Now in your balance sheet, your cash will come up by what? 30,000. So this is an illustration covering provision for discount allowed and what? Debt what? Bad debt recovered after writing them off. Now this is an illustrative question, taking into consideration provisions for bad debt and provision for discount received and bad debt recovered. So let's look at this question. We have trading profit and loss account and balance sheet. Based on this question, it said we should prepare trading profit and loss accounts. So saying from the following, you are required to prepare trading profit and loss account and balance sheet as at 31st December 2018. So we have all the questions. We have sales, land purchases, return inward, carriage inward, rent, warehouse expenses, motor vehicle equipment, bank loan, bank overdraft, salaries, capital, return outward, advertising, discount received, discount allowed, opening stock, debtors, cash, creditors, closing stock. And then we have additional information. They said increase provision for bad debt to 12,000. Increase provision for discount received to 10,000. You know, I said 15,000 bad debt written off years ago, now recovered. So these are additional information. So basically, we had already treated how to prepare trading profit and loss account and balance sheet, also called statement, comprehensive income statement and statement of financial position. So now we're going to concentrate basically on the what? Adjustments. So we're going to be very fast here. So this is your trading account, trading profit and loss account for the year ended at 2018. We already know that it's a function of your turnover, cost of goods sold, other income, and total expenses. So the note will tell us how we got the figure. So turnover here is 380,000. Note 1 will tell us how we got the figure. So we already know it's what? Turnover is sales minus return inward. 425 sales, return inward 45. So 425 minus 45 will give us 380,000. That's what you have here. If you go to the question, you can see your sales here. 425. Returns inward 45,000. That's how you got 380. The next one is cost of goods. So we already know how to get it. Let's go. Note 2. Opening stock, add purchases, add carriage inwards, returns outward should be deducted. You have cost of goods available for sales. Less closing stock, you have cost of goods, so which is 283,000. That's what you have here. So all the opening stock items are in the question here. Okay, you can see opening stock is here. Okay, opening stock is here, 30,000. Purchases, here is your purchases, 240,000. Carriage inwards, here's your carriage inwards, 40,000. Returns outwards, here's your return outwards, 20,000. Closing stock, here's your closing stock. So they are all in the question. So we had it there 283,000. So turnover minus cost of goods will give us our gross profit. We have 380 minus 283, 97,000. That's our gross profit. Okay. Now we have other income, note 3. So how do we get other income? We have other income here, note 3. Discount received is in the question, 45,000. Bad debt recovered. Remember, in the additional information they said there was a bad debt written off years ago of 15,000, and now it has been recovered. So it will be an income, okay? And then your cash will also what increase. If we come to the question, you can see our discount received in the question is 45,000. That is what we have here under other income. Discount received 45,000. Now if you come here, note 3, bad debt written off years ago now recovered. Okay, so cash will come in, income will increase. So that's why we have bad debt recovered here, 15,000. Okay, now there's another note. Note 2 says, or note 2 says increase provision for discount received to 10,000. I told you in the class, increase or decrease a function of what? Opening provision and closing provision. Now the examiner is even very, very, very magnanimous. It's telling you increase, okay? Instead of trying to disturb how you think, he's telling you straightforward, increase provision for discount received to 10,000. So what is the opening provision? There was no opening provision in the question. So opening provision is what? 0. So we have, look at it here, provision for discount received. Opening provision is dash, nothing. Closing provision is what? 10,000. So provision for discount received has increased from 0 to what? 10,000. The difference is 10,000 that will be taken to what? Profit and loss. That's what you have here as other income. Provision for discount received, 10,000. If you add everything, you have 70,000. That's what you have here as other income. 70,000. So 70,000 plus 97,000 gives you 167,000. That's your gross income. So the next one, your total expense, which is 172. Note 4 will tell us how we got the 172,000. So we go. These are the notes. Rent is in the question. Salaries expense. Warehouse expense. Salaries and wages is in the question. Provision for bad debt is an adjustment. So let's go. They said what? Increase provision for bad debt to what? 12,000. I told you, increase or decrease a function of what? It's a function of opening balance of provision and closing balance of provision. So here, provision for bad debt. Opening provision is 0. Closing provision is 12,000. So that means it has increased from what? 0 to 12,000. So profit and loss. Okay. Remember I said when there's an increase, the difference is treated as well as an expense. So that's why it is here in the total what? Expense. So we have provision for bad debt 12,000. Advertising is in the question 20,000. Discount allowed is in the question 25. So when you add everything, you have 172,000. That's what you have here as total expense, 172,000. So as if you can observe here, total expense is higher than the gross income. So that would be a net what? Loss. If it is net profit, there will be no bracket. So when your total expense is more than your what? Your gross income, you have a loss. But if your gross income is more than your total expense, you have a profit. So now let's go. The balance sheet. State of financial position as at 31st March 2018. You already know how to get all these items. Net current assets. Those are your fixed assets. What are they? You have land, you have motor vehicle, you have office equipment. Okay? So when you add them, look at it here. Land 230, motor vehicle 325, office equipment 250. They are all in the question. So pick them up and then bring them to your balance sheet, the asset side. You have 805,000. The next one is other assets. There's no other assets. Goodwill, patent, and other. It's not there. The next one is current assets. You know what your current assets are already. If you don't know them, go to our class on assets and liabilities. So what are current assets there? We have cash at hand. In the question, cash at hand is what? 45,000. Now remember, there was a recovery as an adjustment. So it means that what we now have as cash will increase by what was recovered. So we recovered 15,000 from what? A bad debtor. Okay, so that will be 45,000 plus 15,000 is 60,000. Okay, now your debtors, remember, increase in provision. Okay, provision at the end of the year is derived from what? Debtors, value at the end of the year. So 55,000 minus 12 and give you 43,000. Closing stock is in the question. When you add everything, you have 110,000. Okay. Okay, so that's what you have here as 110,000. So if you add 110 plus 805, you have 15,000. The next one is your liabilities. Long-term liabilities, we have it as what? As bank loan. You can see bank loan there, 600,000. Then we have short-term liabilities. What are short-term liabilities? Bank overdraft is in the question, 130. Then creditors will be affected because we made provision for discount received. I told you, when there's provision for discount received, the effect on the creditors is that what the provision made at the end of the year is deducted from what creditors. So we have provision for discount received to be increased to 10,000. That's at the end of the year. So it will be 20,000, which is the value of creditors in the question, minus the 10,000 provision made. Okay, that is 10,000. So when you add bank overdraft plus creditors adjusted, you have 140,000. That's what you have here as short-term liabilities. Now, owner's equity. Owner's equity. Remember I said that your owner's equity can either increase or decrease. It changes. If the business makes more money, the owner's equity will increase. If the business makes some losses, owner's equity will reduce. If the owner of the business took some money or some business or some item from the business for his personal use, it will also affect his equity. But in this question, there was a loss. That's why your profit is showing negative here. So owner's equity is reduced from 180,000, which is in the question. See capital here, 180,000. It's reducing, okay, by the loss made. See the loss here in the trading account, profit and loss account, 5,000. So that is what is reducing this to 175,000. So bring your 175,000 to your owner's equity side in the balance sheet or statement of financial position. If you add your total long-term liability, short-term liability with your owner's equity, you have 915,000. That's your total liability. So you can see that total liability is equal to your total asset. That is an illustration on adjusting for provisions in the final account, or provisions in the trading profit and loss account and balance sheet, or provisions in statement of financial position and what they call comprehensive income statement. So I will encourage you to go through it, pick up questions and try to attempt them. If you have issues or questions, you can reach me on 08136506356 or send me an email, jeremiah.dosu@gmail.com. You can also like my Facebook page, jeremiah.dosu-jag, okay, for updates on classes. So if you have questions as well, you can also drop in the comment sections. I'll be there to reply you with the right answers.